Hi, it's Phil Anderson, General Manager, Policy, Advocacy and Standards at the FAAA. On this video, I'd like to give you a heads up on a few ASIC related matters. The ASIC funding levy for the financial advice profession for the 2024-25 year has been announced, and it is $1,500 per licensee and $2,398 per advisor. This is $282 less than the levy per advisor for the 23-24 year. This is good news, although it sits alongside the uncertainty with the CSLR levy. The 24-25 ASIC levy will be invoiced in early 2026. Last week, ASIC issued ASIC Report 824 on SMSF advice. This report was a targeted review where they focused on licensees and advisors where risk factors were identified. ASIC expected there would be a much higher risk of non-compliant advice. The results were poor, with 62% of 100 files assessed as being non-compliant and 27% of files showing concerns about client detriment. Unfortunately, the media reporting has suggested that these results are reflective of the profession as a whole. That is not the case, and we've expressed our concerns with respect to ASIC's messaging and the resulting media coverage. We issued a media release and spoke with journalists in an effort to explain ASIC's targeting of identified high-risk advice. I would also like to provide an update with respect to our advocacy on the issues with the client consent requirements for deducting advice fees from a product. It is important to appreciate that this only applies to clients with ongoing fee arrangements, where the fee is deducted from a product account. It doesn't apply to fees deducted from a bank account or credit card. Previously, our focus has been on the issue where account numbers were missing from the form due to it being a new account and the number was not yet issued by the product provider, and the complications this caused. This was exacerbated by the need to do breach reporting on any client consent forms obtained without an account number. In our recent advocacy activity, we've had some success with ASIC confirming that a fee paid by an SMSF from the SMSF's bank account would be exempt from the fee consent obligation. We've also held discussions about the implications for a client transitioning from accumulation phase products to pension phase products and the case of pension refreshers. ASIC have confirmed that when a new account is created, that a new fee consent form would be required. This could also be the case when a fund merger or product restructure occurs. These requirements may not be fully understood. A critical outstanding issue we're working on is where a client holds multiple products and commences a new account during the course of the year. This creates a practical issue as the period of the fee consent form for the new product will be out of alignment with the renewal timeframe for the ongoing fee arrangement for the client, as well as the fee consent forms for other products they hold. This creates significant inconvenience for clients and an impractical regulatory burden for advisors. We are continuing to advocate for a solution that would enable the realignment of these fee consent cycles with government, and we'll keep members updated with our progress. Thank you.